I am here with your monthly market report for December 2025. We have a lot going on. We have the Fed and inventory going up, and also opportunities we haven't seen for years for buyers. So let's take a look. First, let's talk about what happened with the Fed. The Federal Reserve recently implemented their third straight rate cut on December 10th, and this lowered the Fed funds rate. Now, keep in mind, the Fed funds rate doesn't directly have impact on interest rates, but it does indirectly. This is the overnight trading rate between banks that has influence on the overall long-term interest rates. Now, Federal Chairman Jerome Powell talked about how we're well positioned, and we're going to wait and see what happens with the economy moving forward and how it evolves. So this is important because we've seen three straight rate cuts, and we'll look at interest rates and what that did to the interest rates in the bond market. But moving forward, we may not have as many rate cuts. They're projecting maybe one in 2026 and one in 2027. Obviously, if the economy changes or evolves, we might have changes. The job market is really the number one thing they're looking at. Inflation is very important, but that's been coming down. But job market is still really hot. So if we have a good, strong job market, they're not necessarily going to be wanting to lower rates. But if that cools, they're going to want to lower rates. Now, what happened just recently this week? So when the Fed actually made their decision, we actually saw an improvement in rates. If you look at the third line from the right there, we actually had an improvement a little bit, but really it just came back to what it was the few days before. So even on the 10-year Treasury, we saw rates, the 10-year Treasury dip initially, then come back up. Same with interest rates. We saw interest rates actually go up kind of leading into it. And then once they announced the news that the rates they were going to be lowering the Fed funds rate, the market kind of settled back down. But really it was really just back to what it was the day before. So a kind of a non-event. I think overall it's important for affordability for interest rates to continue to come down, making things more affordable. On average, renting is still cheaper than paying for a mortgage in most all states. From the data we pulled, or all states, there's difference between some of the metros and what's going on. But I mean, this year specifically, based on the data, 50 states in the largest metro areas, and we've seen that renting is actually cheaper than buying. So it's a challenge right now for people that are trying to compare rent to buy. And that's why I like to do these videos and make sure we understand what goes into it. If you're only paying the cost of rent, yes, it might be cheaper today because you're only paying the rent. Owning a house, is property taxes, maintenance, home insurance, your actual mortgage payments. So it's important that there's other components that go into owning. That's why you want to make sure you go into it with eyes wide open, so you know what the expenses are and make sure you can handle them over time. Renting is cheaper right now. So a lot of times if people just need that short-term lower payment, then the renting might be the way. The affordability gains are broad though. The 35 of the top 50 markets are posting annual improvements, and 40 of the 50 are improving over the previous month. That momentum matters because it's helping some potential buyers get back in the market. Although we're talking about rents on the previous slide, home buying is starting to get more affordable overall, which is very impactful for the numbers. If we look at the wealth gains over years, just because it's a little bit cheaper to rent at periods of time, the overall wealth gain for renters compared to owners is pretty significant. And then if we look at, this is pretty crazy. So the home price expectation survey that just came out, this is important to kind of visualize and see. If we see a small improvement in gains, let's say the forecasts are anywhere from 2 to 3% over the next 5 years. But if you think of it a cumulative in gains, so the gray section is just the actual numbers as they show per year. But as you add that up year over year over year, 2 or 3% might not seem like a lot, but it's on the overall value of the house. So if the house is $500,000, just because you have a mortgage for $200,000, let's say, that gain is basically on the price of the house. And if you look at the accumulation of the value gains over the years, so if you look at, two, and then another two, and then another three, and then another three, and then another four, it gains momentum and compounds based on that number. So it's not just 2% a year; it actually 2 or 3% gains and compounds. So this is pretty crazy. Over 5 years, it could be a cumulative of 20% based on the forecast that are out here by a lot of people that are smarter than me. And we track all these people, and it's important to look at this visually, because 5 years, if you put the brakes on ownership or even buying an investment home or second home, if you put the brakes on that and wait 5 years, how much that can be a change in your net worth and the home value. Now, calculating the annual cost of homeownership, we assume 30-year fixed with 5% down payment on a median home price. That adjusts. This is based on the first American chief economist, Mark Fleming. This is important because what they're doing is they're adjusting this, not only just the monthly payments with that 5% down or 30-year fixed, but what's crazy about this is the annual gains are also factored in based on the equity that you could technically have access to. So as you gain equity, that is something that people can use to pay off debt, to consolidate, to if they refinance, to lower rates. It is priced into some of the equations the economists look at, and it should be priced into your equation too. But it's a fairly big ticket item that as you can gain wealth over time, which is unlike renting. There's a homeownership remains a big wealth building engine over the years. If we look at the different periods of time, yes, we've had these swings up and down as based on owning compared to rent, but the intervals, the four intervals, homeowners, if they stayed long enough in there, Mark Fleming from First American talks about, if they stayed long enough, then they'll actually see those gains outweigh the downsides in these different periods of time. So I think staying in the house long enough to see that play out is important, because if you buy a house and want to sell in the next year or two, it might not be the right time to sell, just like a stock. So you need to make sure you have a long enough longevity there. Houses aren't as liquid as stocks. So if you want to go sell it, you're really subject to market conditions even more than stock market, because you have to find a buyer, and sometimes it's harder to find a buyer. So you want to have staying power and be able to stay through it. So don't just buy a house just to be there for a year or two, unless you're a professional flipper and you know all about the market. It's important to understand that it might take a little time for a certain cycle to recover. Now could be a really good time. We're seeing this across the board. So this is from Chief Economist at Redfin, Daryl, and this is important because nationally, it's a good time to buy if you can afford it. And this is what they're saying. We're seeing this. If buyers are serious about making offers, they want to consult a local agent, have confidence in their finances, income in the future. But what we're seeing real time as a local lender here in Arizona is that buyers are having more leverage to negotiate with sellers. So as they can come in, they can ask for seller credits, they can ask for buy downs, they can ask for things to be fixed on the house. Now, we're not in an extreme buyer's market, but we're in a market where buyers have the advantage. So if you're out there trying to decide if you're going to rent or buy, or if you're going to sell your house, you need to understand that buyers have a little bit of the upper hand. So if you try to strong arm them too much, they're going to try to find another house, or you'll look at different options. So you have to come with a win-win mindset. How do you make this win for you as a seller and for the buyer to make it happen? Affordability for home buyers reach a 3-year high. So even though we talked about rents being affordable, home buying is actually reaching a more affordable level in the last 3 years. This is excellent. This is for because prices have kind of moderated. Sellers have started getting a little bit more realistic on what they're negotiating with buyers, like we just talked about. And obviously interest rates. Interest rates have taken a nice drop over the years. 3 years ago, we're touching almost 8%. So this has been a significant benefit for affordability and home buyers. A lot of people feel a little bit more optimistic about buying a house here soon. So that's definitely been important, mindset wise. And Mark Fleming from First American chief economist again says affordability should continue to improve, allowing more households to be, unlocked and homeownership doors. So we're going to start seeing this affordability improve, and that'll help people buy, but also help people move that need to buy. So let's say they need to sell a house and buy, that'll free up some inventory for other buyers to buy. Make the market a little bit more healthy, so there's more inventory in the market. No matter which way real estate market is leaning, though, buying now means you can start building equity immediately. This is from Bankrate. I agree, because the challenge is you're trying to if somebody's trying to time something perfectly, it's very difficult as far as timing the right house that you want, but also the right price. Because if you're just going after price, you might not get the house you want. And if you go after the house only, you might not get the price you want. So you have to find that right balance. But you're really buying a house, get into the market, let the appreciation work for you. If you're trying to time that at perfect time, what I find most of the time is people are scared during that perfect time to actually buy. So they don't buy and they continue to wait. We actually saw this during the early days of COVID, and even in 2011, 2012, 2013, 2014. Those are great times to buy. But I had conversation after conversation, people worried about something happening with the market, even in those times. And so through my experience is that you can't continue to wait. So I agree with this significantly. Get what's right for you. Don't, do something irrational, but, buy something that works in your lifestyle and your living situation, your budget, and stay in there and let that appreciation grow over time and work for you. A lot of opportunities for home buyers right now. We talked about, last November and over the years, this inventory has continued to grow. The growing inventory has put downward pressure on listings, and this is what Joel from Realtor.com is talking about, senior economist as well. And we're seeing this continued growth of inventory improve the market and help buyers, but also help people that are selling and buying. Because you got to think about, a lot of sellers are also buyers. So even if you sell it a little bit lower price because inventory has gone up, that means you're buying at a little bit lower price as well. So don't undervalue selling and buying in this market, because it really benefits you as a seller as well. Active housing inventory listings nationwide is still about 6% below the pre-pandemic levels, but it's really based on area. So some areas are above pre-pandemic levels. That's the red. If you look at the red states here, that's actually, we have this based on inventory levels. They're actually above inventory levels. Some of the other states in these different colors here are actually below inventory levels of 2019. 2019 time period, inventory is important to track because we had such low inventory for so long and for the last couple of years, and now coming back to kind of a more normal inventory market is a really good sign for a more healthy market. Home buyers found they have more options, as numbers of active homes rise from Realtor.com. And we're starting to see that buyers have options, which has been helpful. But inventory is kind of topping out. So last 6 months, we've seen inventory kind of be just above 1 million, but it's been kind of flat. This is nationwide. So we're starting to see a kind of a flattening of inventory. It'll be interesting to see if rates go down more, if more people want to list their house. But this is kind of an interesting trend, because we saw inventories continue to grow all the way back in from 2023, but now we're kind of seeing that flatten out. So might be kind of a good little window for buyers to make offers on these. Median days on the market, we've seen this continue to creep up. Average days are around 63 on national average. Every market might be slightly different. I like looking at national average because it's a little easier to look at the averages, kind of the movement of the overall market. But obviously, a realtor can specifically get you dialed in on that. I'm a local lender, and I have a lot of realtors we work with, but each market's different. So you definitely want to talk to the specific realtor in that market. Even the neighborhoods sometimes and the cities can be different. So that's why it's very important that we look at granular with the realtor specifically. But the national trends, we continue to have, days on market tick up overall, again, kind of signaling more of a buyer's market. Share price cuts back into normal levels. So we're starting to see price cuts come back. So the price cuts overall, we have seen very low price cuts back in 2020, 2021. And now we've kind of seen these price cuts on listings, kind of an average normal level. I mean, we look back at 2017, 18, 19, and we're kind of still sitting in that window. Obviously, 2020, like I said, in 2021 was very low, very different than what we're seeing right now. Price reductions have begun to slow a little bit. So, price reductions overall, hopefully will, slow down because we saw big jumps overall, but now hopefully we don't have a lot of too many more price reductions. I think sellers need to understand what they're listing their house for. If they list so high, they're going to have a price reduction to get kind of back to market. I think now what's happening is sellers are being a little more realistic when they list their house. So they know if they list it, they're going to be somewhere in the market. If they're way above, it makes it a lot harder to sell, and they have to do price reductions. During the winter and fall, this is a great time to be buying and actively looking and doing deals. So whether you're a realtor watching this or a buyer or seller, I've seen this year over year where the winter time is like this sweet spot to be able to buy a house. And if you think about it, people that are selling right now probably are fairly motivated, because why else are they selling during this time? And they usually either want to close by the end of the year or want to get out of the house into something else. So sellers are more motivated. And then buyers, I can't tell you how many buyers right now we're talking to, and they're like, you know what? We're just going to wait till January. We're going to wait till February, and ask why. And they say, oh, just because, I think there's a lot of stuff going on right now. That's not a reason to keep looking. That's not a good enough reason to stop looking at a house, because you can always put a closing date after the holidays, January, February. You could do extended closings, but buying the good deal where there's not a lot of other buyers that are competing for this. This is something we literally see every year, and it's real time, and we're seeing it today in December. I'm recording this on December 13th, and we're seeing this today. People are starting to just kind of, I'm going to wait a little bit. My recommendation is continue to look. If you find something, jump on it. If you don't, then you can wait. You can always wait. But if you just stick your head in the sand and just say, hey, I'm just going to wait just because, and pause for 30 days, then you definitely can miss out on opportunities that you either can say yes to or no to. But if you don't see them at all because your head's in the sand, then that becomes a big challenge of getting you a really good deal. So we've seen price cuts on new builds as well. I think the challenge with new builds is they are pricing in a fairly big kind of a buy down on the back end. So what they're doing with lenders is they're actually working deals with lenders to do these buy downs on the back end that's built into the price. They're doing it anywhere from 10 to up to 14% is what we're seeing. So if the challenge, that's all great because you get let's say a reduced interest rate, or you get these deals sometimes through builders. But if you're going to go sell the house immediately, let's say within the next year or two, and you want to sell, you're going to compete against the builder that has deeper pockets that can manipulate different price points. So if you're going to buy new build, you need to make sure first you understand the numbers. Is it just a temporary buy down? If it's a temporary buy down, you could do that on a resale. Nothing special. If it's a true permanent buy down, then you have to decide, okay, am I overpaying for this house just to get a artificially low rate? And am I going to be in there 5 or 10 years? I wouldn't be buying a new build unless you're going to be there 5 to 10 years. Because if you turn around 2 years from now, you try to sell, like we're seeing some sellers right now trying to sell, they're having issues. We're starting to see short sales come back. I was just talking to a realtor partner that does a lot of short sales on the outskirts of Phoenix area in the past, and now he's starting to do them again. A lot of people that bought these new builds with low down, life changes, and now they can't afford the mortgage. I also have a friend of mine that's a HOA lawyer. He's starting to see past due HOA dues and things that are starting to show signs of concern. But you need to have an out. If you buy a new build or buy a house where you can't sell, or you're going to have other competition, it's a real issue. So if you're going, looking at new builds, understand price cuts are great or artificially low rates are great, but why can't they sell it? Why are they giving things away? That's always kind of a red flag to me. So hopefully that helps you. Um, Kevin Brierton, your no excuse lender, certified mortgage planning specialist. We are excited to help you with information, resources, just like this monthly market report. If you liked it, please like, comment, share, and follow for more. Have an awesome holidays, Merry Christmas, Happy New Year's, and we'll catch you in the January edition of the monthly market report.